How did your portfolio actually do in 2025? And more importantly, what should you change in 2026? There are three big surprises which most investors didn't expect. And at the end, I'll walk you through my 2026 game plan. Hi, and welcome to the Money Matters MD Show. I'm your host, Dr. Abhishek Gadre. I'm a practicing physician, and I help high-income professionals like you take control of your money. Big surprise for 2025, the international stocks finally beat US stocks after a 14-year losing streak. So the developed international company stock delivered around 35% total return as opposed to the US S&P 500, which was somewhere around 17%. So the international stocks delivered more than twice as much. Now, the US was not bad at 17%, but even the emerging markets delivered better than the US at around 25%. So the last time the international equities actually outperformed US equities was back in 2007 to 2010 range. And over the last 15 years, the US S&P 500 was basically impossible to beat. Now, this emphasizes the importance of international diversification. I don't want you to chase performance, but it's important to own US and ex-US or international equities together in your diversified portfolio. Now, your portfolio needs to survive at least as long as you do. So if you're going to live 40 or 50 more years, you really don't know if the US or international, which one will outperform. So you're basically better off owning the entire globe. Now let's look at the US equity market using the Morningstar style boxes, 3x3. So the large cap growth companies have hands down beat all other segments, and this is not a surprise. The AI stocks and the Mag 7 stocks continue to outperform, and the small and the value stocks continue to underperform the overall market. Now, looking at the large cap growth stocks, the VGT, which is the tech ETF, performed around 21% and outperformed the overall S&P 500, and even the NASDAQ QQQ outperformed S&P 500 as well. Now, before I talk about how a few of my favorite ETFs and funds did in 2025, let's not forget about the bond market and alternatives. Now, inflation was right around 2.7% annualized for 2025. And as you can see, the cash delivered around a 4.1% return. So it actually delivered more than a 1% real return. So what is a real return? You look at the actual return, you take off the inflation, and the resulting number is the real return. So core bonds performed fantastically. They delivered around a 7%, more than its actual yield. The NAVs, the net asset values, also went up as the interest rates from the Fed were cut down. TIPS delivered around a 6.7% return, which is 4% real return, which is excellent. Now, I get this question all the time that if cash is yielding 3 or 4% risk-free, do I even need bonds at all in my portfolio? And the answer is yes. Bonds give you a risk premium on top of that risk-free rate that you get from the federal interest rate from short-term treasuries. You invest in some corporate debt and some mortgage-backed securities as part of the US total aggregate bond market index, and you get that risk premium. Now, a few percentage points really helps boost that real return on top of the ongoing inflation. And now, over the course of decades, it really helps boost your overall return and stabilizing your portfolio. Now, just for your quick reference, if you're interested in the Morningstar style boxes for the bond market, I'll show the values on the screen. Now, all the returns I'm talking about today are going to be the total return for 2025, which includes the change in value and dividends entirely reinvested. Now, I know we're looking backwards and reviewing 2025 right now, but do you know how the markets are actually going to do over the next 10 years? Well, my crystal ball is broken, but Vanguard actually came out with a forecast for 3% for the S&P 500 over the next 10 years. The large cap growth segment is quite overvalued, and mathematical models are projecting only about a 1 or 2% return over the next 10 years annualized. That might mean a 0% real return, and the question is, are we headed into another lost decade? I made a whole separate video looking at the Vanguard's mathematical models for the 10-year forecast, and I'll attach it in the end of the video, on the end screen, and in the description below. Now, it was a big year for alternatives. The US REITs didn't do so well, but international REITs performed quite well. They delivered around 22%, and this is the surprise number 2. They outperformed the US large cap growth sector and even the tech sector, the VGT ETF. Now, gold and silver investors were really happy in 2025, and you will see the returns at around 61% for gold and 139% for silver. Now, the only asset class which was actually negative for the year 2025 was Bitcoin, which was negative 10%. Now, let's look at how a few of my favorite funds did. We all have biases and we all are allowed to have some favorite funds. Now, I personally like the VZICX, which is a Vanguard active mutual fund for international market, which actually delivered around a 38% return compared to the index of around 32%. Now, the international small cap value outperformed everything else and gave a 47% return for 2025. So it's interesting that the factor tilts of value and small did so well in international, but on the US side, the AVUV ETF didn't really do so well. Now I'll show you a graph of how the VTI and VXUS and how the active tilts of the international investments did, and you'll see a big dip in that April 2025 time, which was when President Trump announced the Liberation Day tariffs. Now let's look at how the US value sector did. A few of my favorite funds, including SCHD and AVUV, both really did poorly. In fact, SCHD only gave around a 4.56%, and AVUV only delivered around a 7.6% as compared to the total US stock market, which delivered more than 17%. Now, VTV, which is Vanguard's pure value ETF, did a lot better than SCHD, and you'll see the numbers on the screen. Now, nobody holds an individual investment or a single ETF in their portfolio. Most portfolios are balanced with multiple different asset classes. So I like to look at how balanced portfolios did for 2025. Now, one quick little thing before we move on, a lot of you viewers right now are not my subscribers. Please support my channel by subscribing to it and liking this video. That's how the algorithm knows that I'm making high quality content, and it can show it to other viewers just like you. This is for educational purposes only and not financial advice. Now, let's look at how balanced portfolios did for 2025. By balanced, I mean a mix of stocks and bonds together, because most investors shouldn't just be holding entirely stocks. They should have some amount of bonds in their portfolio, and the allocation of bonds should increase a bit with age. So I particularly like looking at the Vanguard's life strategy funds, which are globally diversified equities and fixed income holdings all together in just one portfolio, and they come in a flavor of mix from 80-20 all the way down to 20-80. Now, I particularly like the Life Strategy Growth Fund, which is a 80-20 portfolio of stocks and bonds, which is globally diversified. It delivered around a 19.6% return. Now, if you compare it with the S&P 500, it delivered around a 17% return. Now, it's always interesting to see how one asset class performs compared to a completely diversified portfolio in setting of an unexpected event. Now, April 2025 was an excellent example of one such unexpected event when President Trump announced tariffs on the Liberation Day. So a globally diversified 80-20 portfolio of stocks and bonds actually outperformed S&P 500 in 2025 and even gave you a smoother ride. Now, investors in S&P 500 lost around 18% within 1 month in April 2025 when the tariffs were announced, as compared to a globally diversified life strategy 80-20 fund only lost around 12%, and you'll see the volatility number was also much lower for the life strategy fund. Now that you know what happened in 2025, the question is what you do for 2026. So I actually have a financial checklist which I follow in the first quarter of every year, maybe somewhere between Jan, Feb, or March of every year. And I think it's very helpful to be intentional with your money rather than reacting to what the stock market is doing or just going with the flow. Now, I'm going to make a whole separate video about the January financial checklist, and I want you to go through this checklist one by one and make sure you have peace of mind. Now, before I move on with the rest of the video, I need your feedback. So did you like the 2025 market performance and portfolio review? If you did, I would love to hear from you. Now, if this is a successful concept, I would like to do these reviews every single year in every January moving forward. Now, I don't think you need to look at your portfolio every single day and try to chase performance or time the market. But I do think you should look at your portfolio at least once every year And the optimal time might just be January, so that you can see how your investments did the last calendar year. And I want to take that to-do list item off your plate. Here at the Money Matters MD family, we can do this together moving forward every single January. So what am I doing differently in 2026? Am I abandoning SCHD and AVUV because the value sector did poorly? Answer is no. Am I doubling down on US large cap growth? The answer is no. Am I buying more international because it did really well? Again, the answer is no. All I'm doing is rebalancing all my investments once a year. For example, my international stocks did quite well and outperformed my US stocks. I'm going to move a little bit of money into my US investments. And actually, the way I do it is just contributing more money to the US over international rather than actually moving it. Now, another thing I'm doing is increasing my bond allocation by 1% every single year, and I'm just trying to emulate a target date fund type glide path. So I become slightly more conservative every single year. There is no perfect portfolio, so stop looking for it. Just find something reasonable that you can stick with even in the toughest of financial markets. Like Jack Bogle said, don't look for the needle, buy the entire haystack, and stay the course. Now, this actually is an excellent book from Jack Bogle, which I highly recommend you read. And if you're interested, I'll leave an affiliate link in the description below. Now, mind you, it is an affiliate link and I do get a small commission at no extra cost to you. It does support the channel, and thank you for using the link if you want to buy this book. If you learned something useful today, please subscribe to the channel and like this video. Thank you for watching. Money Matters MD, over and out.